We every time quiz you on Hong Kong and whether you've seen money flows, wealthy clients wanting to move their bank accounts out. Give us an update on that.
Yeah, first of all, nice to be here. Hong Kong's in good shape, right? I mean, it was a horrific 6 months and culminating in a really horrific period of violence in December. But while the issues are as yet unresolved, and we know that, so the idea that this is behind us would be hopeful but naive. But peace is prevailing in Hong Kong, and that's very encouraging. So what we saw through the worst of the period was some people, very few on a percentage basis, made some provisions to move their money someplace else, opening an account someplace, but virtually none of them actually moved their money. So the business activity has stayed very strong in Hong Kong. So Hong Kong as a trading hub, Hong Kong as a financial center, and we see it from the IPO calendars, and is very strong. And they haven't missed a beat in that regard. The hospitality, the retail sectors, tourism have been severely impacted. Obviously, a big chunk of the tourism came from mainland China. It will take a while for them to come back. They had a bad experience when they were in Hong Kong, and the rest of the world has stayed away while things were unsettled. Now that peace is breaking out as it persists, as we hope it does, I think Hong Kong will get back to normal over the course of this year.
Moments ago, China has taken steps to actually cancel some of the festivities, lunar festivities, because of the coronavirus. Yeah. As a big chief executive in the region, how do you monitor and how do you prepare for it?
Well, it's concerning. I mean, we first start by making sure that our own colleagues are taking the proper precautions and safe. So you can imagine the level of anxiety is very, very high. If somebody gets a cold now, there's a question whether something much worse, and that can cause the whole office to lock down. So that's we start at home. We're trying to stay very close to our clients, help them understand what their exposures are. Obviously, people in the transportation and tourism industry themselves are at some risk within China, especially coming into Chinese New Year. So trying to help identify working capital needs or challenges that will come up if things progress as they have over the past 24 hours. Other than that, we're watching with the rest of the world and hoping.
But do you have operations that could be directly affected?
Yeah, we do. I was intending to be in Wuhan next week. I mean, we have a very substantial operation in Wuhan and Chongqing and Xi'an, all through Western China, and so they're directly affected.
So are you speaking with health officials on the ground there, or who are you?
My colleagues in China are speaking with health officials continuously. But as you've seen and as you've reported, it's a very fast-moving set of facts. I mean, even today we've had new pieces of news. But we have our own intelligence on the ground as well from our clients and from our people, and it's very consistent with what we're hearing from the government. So I'm encouraged by this commitment to transparency. I could only encourage it to continue.
Are you encouraged by U.S.-China Phase 1 deal, or actually is Phase 1 nothing because it's simply an understanding that things won't escalate for now?
No, it's encouraging because they demonstrated that they can agree on something, and it has stopped a cycle of escalation. That's a good thing. There's a bit of clawback in terms of tariffs and protection of intellectual properties and opening up the financial services markets. These are all good things. Does it solve the problem? No, of course not. The structural issues are still there. But the fact that the two sides have demonstrated a willingness to agree on some things, we have to take as encouraging.
Does it help Standard Chartered?
With the tariffs going up, there was no particular impact on Standard Chartered, so coming down there won't be either. What's challenging is the prospect, the uncertainty around this prospect of a bifurcated world, with our customers and our clients not really knowing how much they have to reconfigure their supply chains. And if you don't know what you need to do, you tend to prepare for the worst, which usually means a lot of wasted cost and investment. So the increasing uncertainty was a problem. It's come off a little bit, but the uncertainty hasn't improved too much.
President Trump was here yesterday. He spoke to a number of business leaders. I think you were in some of those meetings. What was the message coming from the U.S. administration?
I mean, the key message I took away from the messages was that he's running for president of the United States. So the message would seem to be quite targeted at the domestic audience. It was... I'd say that the themes in Davos have overwhelmingly been sustainability. I mean, to the point that it's probably crowded out some other very important discussions like the challenges around inequality. But the traction on sustainability has been very impressive, I think. So hardcore commitments in terms of the metrics that we'll be using to measure progress. And I say specifically, what does my business contribute to this climate change dynamic, and what can I do about it? And then specific commitments from corporations, and a willingness, I know, across the banking industry. I was chairing a session yesterday where we focused a lot on what the banks could do collectively
Right.
to address the sustainability question. So, I mean, those are the messages coming out of Davos, and then there was some noise on the side.
Okay, if you look at markets, what is the one thing we had geopolitical concerns, regarding Iran and Iraq, U.S.-China trade is still at the forefront, U.S. elections, which you kind of mentioned. Out of those three, what's the biggest risk for the markets?
I think the big structural risk, because it's very impactful and as yet unresolved, although in a peaceful zone right now, is the U.S.-China tensions. Iraq, Iran, U.S., Saudi has the possibility to explode. Right now, that feels unlikely. I mean, it feels like there's been a dramatic escalation and then quick de-escalation. And certainly what I can pick up through the hallways, and it's just, I think everybody's got their views. There's a genuine willingness on all sides to try to de-escalate at this point. So, but of course, if that changed and it impacted oil flows through the Straits, then we'd be in a very different place. So to me, it still comes back to U.S., China, and getting some real progress there.
We're moments away from the ECB decision. Are central banks exhausted? Are they running out of ammunition?
I don't think they're running out of ammunition, but I think the ammunition is a little bit less effective. So, I mean, of course, there's new rounds of quantitative easing, or there's new types of assets that central banks could buy to affect credit spreads or even affect equity prices at a point. But it seems to be an exercise with diminishing returns. So I don't think they're out of tools by any means, but they might have to use more of those tools if they feel the need to use those tools at all.
Right, but we've heard President Lagarde of the ECB trying to put pressure on fiscal. If you were to quantify 2020, if we had one monetary policy or one fiscal policy, would it be, government spending more, and does that actually give you more business?
No, if there's a lesson that we've learned from developing markets through the years, it's that aggressive fiscal programs targeted at things that really improve the quality of an economy, so infrastructure, education, healthcare, those things are typically a really good use of money, especially when you're funding it with very low cost debt, which is what we have right now. Fiscal deficits that are being used to drive consumption give you a sugar high, but don't structurally improve the ability of the economy to grow and strengthen. So I think to the extent that the U.S. and Germany, so the two guys with the biggest fiscal firepower right now, step up their fiscal spending, but focus on these structural value creators, that could be a very important complement to monetary policy.
But there's a little noise that actually Germany is ready to spend what a lot of people ask of them.
Well, they're under a lot of pressure. I don't know if they've internalized that yet.
Okay, the negative rates, how much of, every bank is complaining about negative rates,
yeah.
But actually, do policymakers understand that this could not only lead to really testing the banking models even further, but actually social unrest?
I think policymakers have to be very careful about what they say, but I can't imagine that they don't know that it's not just bad for the banking system, it's very bad in terms of creating imbalances in the economy and imbalances in capital markets, that when they unwind, it can be quite dangerous. And since it's clearly part of the central bank's mandate is financial stability, they know that this is another kind of drug that is also having diminishing returns, and that is piling up quite a substantial problem for the future.
Yeah. Very quickly on your turnaround plan, is it time to say mission accomplished?
I never say mission accomplished, and it's not accomplished. But what I can say is that our bank is super strong at this point. We have all the foundations that we need. We have all the growth momentum in the key areas of our cross-border corporate business, our affluent client business, and then more recently our massive investments in digital banking. All those things are working extremely well. We just have to see them through to fruition.